TGIF, Kevin, Brock, Alexander, everybody. Dollar had a great week, broke out over 94. Starting to show a little bit of some signs of tiredness. Good morning, Hugo. Also, it's a great day to start a trading summit. What do you think, Arena? So, we're starting to get a little bit of divergence here in the US dollar. I wouldn't be surprised to see some type of rest for this wave, some type of pullback, maybe back towards 93.80, 93.60 sometime next week. Very good week for the yen. We have a nice little reversal week. I'm thinking, you know, this could be the start of something pretty good. Nice little reversal week after cleaning out stops here. So I think 106 is in the bag. I wouldn't be surprised to see something even more dramatic and another negative week in the S&Ps and holding that precarious 3200 level. Maybe we'll get a bounce before they challenge it and take it out. That's what I'm looking for. I think that next week, what we may get is a pullback in the dollar. That's going to be a break to buy, rally in euro, rally in cable. I'd still like to, even though it's a pretty negative week, we're getting a nice little candle here. Still think that I'm going to have a chance to sell it up here around 31. That's part of it. And a very negative week in EG. It sure tried to turn, but it couldn't. I'm looking at this. I thought I'd give you a long-term look because, even though I'm working the short side of EG, hi, Monica and Money. When I look at the weekly here, I know it looks a little messy on EG. So maybe it was the monthly actually. Yeah. No, it's a daily. Anyway, so this is one heck of a flagpole. And maybe we're just going to get an ABC down here towards this 90 and a half, 90.20 level, and then get something like that from down here that could take us to the upper 90s. And if you look left, all the way to the left on the daily, back to March, see this? What kind of high was that? Look at this reading. What do you think? Hi, Sinatra. You guys know what kind of high it is. Oh, thanks, Jess. It's a confirmed high. I think it's going to give way. Thank you, David. Thank you, Jess. So I'll be looking to buy this breakdown here. maybe around this 50-day moving average, 90 and a half. So another 80 pips maybe sometime next week. And we have the summit beginning today, everybody. So hope everyone's registered. I think it's too late if you're not. I'm sorry. It is, isn't it, guys? Too late. You snooze, you lose.
No,
You think maybe
people can
huh?
still register. They can still register. Yeah.
You think maybe we could, let's see, we have a few hundred in here. You think we could squeeze them in like President Trump does in his rallies? Huh?
We certainly can.
All right. Okay. So that's good news, everybody. You still have time to get in there. Um,
Well,
Mass.
one thing I wanted to mention is we actually had to expand our seating and the amount of people we could let in live.
Wow.
And Steve managed to do that 2 days ago, which is good because we shouldn't have a problem with live events. The debate might be an issue, but because that's going to be such a big draw.
Yeah.
But you guys should get signed up just to make sure you have a seat. So I'll let you
And
continue.
don't forget when you're sitting at your workstation watching this or whatever device you're using, keep your mask on. Right, Blake? Just in case any oxygen flows out from the speakers during the event.
There you go.
So, really, I think that was the feature of the week was the dollar, and with the dollar, firming up, S&P, didn't have such a great week. It followed through. It's under the 50. Blake's been even when it was all the way up here. Blake's been talking about a 200-day moving average test. That's possible. Maybe we get a little relief rally, but every rally so far seems to fail. And remember, this early in the week, this told me we'd get one more low, which did manifest, and I didn't know if we were going to confirm or not. We haven't confirmed. Okay, so I know some guys that were saying it was going to have a correction of 3,200. Peter Goldstein, and then we're on our way again. Jury's out on that, but I could see us maybe correcting if the dollar softens up for a little bit next week. Quick look at the precious metals, and if you listen to Grega and you listen to Blake showing the trend line that it was eating away through the uptrend, and you looked at my descending triangle, I don't think anyone here that was listening to us got stuck or was wrong-footed on silver. Even our silver bull, Stelios, liquidated before this break, looking to add on down here around 21 or so. So I think we did a good job protecting your equity over the last couple of weeks, and it was really fade the Fed, right? And last week, everyone came in all bared up on the dollar, all bulled up on precious metals and equities because the Fed was going to come in again like Mighty Mouse and save the day. And what a great fade it was. The dollar rallied big after the Fed. The market became disappointed. U.S. dollar yen turned up this week, and the gold fell apart. The silver really fell apart. So um, I think we did our job. Whether or not you capitalized on it or not, what's important, even more important than winning trades, is avoiding the big hits. It doesn't show up in your P&L because you avoided it, but take it to the bank. It would have been tough to crawl back from it. So, with that being said, we're going to have a couple of faces today, so you could call us two-faced today if you want. And I don't think we are because we also admit when we're wrong. I don't have a problem saying it. It's not a news flash or a headline because it happens. And just wondering, Blake, what you think with the dollar finishing pretty good here. anything you're seeing that could maybe generate some type of pullback in the dollar next week,
Um,
get some
um,
relief?
Yeah, I mean, it's kind of what happened yesterday. We're going to have to see a rally in risk, and we got that a little bit yesterday. But when stocks rolled over overnight, the
Yeah,
dollar firmed up. So I mean, it clearly shows you guys, all of us, really, what the role of the dollar is now. So it's there when you're in a world where interest rates are at zero almost everywhere. Then the dollar becomes a hedge now, and so risk on, risk off. And then many of you might think, well, shoot, I'll never buy the dollar again then ever. But I would argue that if you look at the S&P, we're probably in for a lot of two-way action from here. And so if you guys wonder, if the dollar is going to, if you're going to be able to buy dollars here and there, I would argue, yeah, because, excuse me, we're probably at peak near term in the S&P, and we might come down a little bit. The dollar will firm up. S&P bounces, dollar's going to sell off, and until we, 2, 3, 4, 5 years from now, whenever interest rates start moving again, then we can use the dollar. The dollar will move on, a different pretense, I guess. So for now, that's what we're dealing with. Just to answer your question, Coach.
thanks.
Yeah, I
Yeah.
mean, yeah, that's it.
I mean, what do you think? Is it the tail wagging the dog, or the dog wagging the tail? Is it because really, Blake, I noticed the dollar turned up before the market sold off on this go around by a day
Yeah,
or
so maybe it
two.
was a little bit of the tail wagging the dog.
Yeah, yeah.
You
So
know,
the
I do
dollar
think that
led it.
I was going to say I think that the equity markets really are moving. It's making the dollar move. But yesterday we might have seen a little inclination first that equities were going to bounce. When the dollar actually sold off a little bit first. So
I like
uh,
that red line you have up there, Blake. I think it's a magnet. I think we're going there.
yeah,
We'll have
that's
to extend it a little bit. Yeah, but
yeah.
there, yeah, I'm going to be watching that area. Plus, it's what, a 38% retrace.
Yeah, and I think that's probably fairly logical
Yeah,
between now and the election. We get down there, especially if
yeah.
Joe Biden continues to pull away in the polls. You know, then the market will probably weaken into the election a little bit. So I'm so sorry. I'm so tired. I'm tired at the end of the week.
Let
I
me see.
dude, I got to report something really cool happened last night that never happens ever. Every once in a while overnight, I'll put in a uh, an order. Well, yeah, it's probably like, I don't know. Depends on the volatility. Like recently, I haven't, but once the market picks up in volatility, I'll put some outstanding orders out there, and I'll say, hey, if the market gets here, I'm going to short it. Gets here, I'm going to go long. Put in some stops and limits, that type of thing. So yesterday, I was trading the U.S. dollar Mexican peso. I shorted it. Right, I'm going to tell you how I traded it, which was horrible. I shorted it literally at the highs, right here, at 2268 or something like that. I made like 400 pips. It dropped from 2268 to 2262 or 3. And so I literally made this little, it's like a 10 pip move, really, if you're like thinking about the euro. I actually made like a little bit right at the top. And then this happens, right? The bottom falls out. So we get through these lows. This is 127% extension, previous resistance right here. I bought the dollar Mexican peso like right here, like 22, I want to say 22.30 roughly. I got stopped out, when it dropped through 22.20. So now what I had made earlier, I lost later. And then when it dropped through 22, I picked it up. I sold it at the end of the day at 22 like 10 or something like that. So I made a good amount on that bounce. So it's basically flat for the day. But I traded it really like a bozo. I could have made so much more, especially if I knew initially it was going to roll over. I should have just stayed short, and I would have made a killing yesterday just in this peso. So last night I actually put in an order, Dale, to buy the dollar Mexican peso at 22.01. I put in a stop at 22 or 21.94 and a limit at 22.29. I went to bed, got limited into the trade, got limited out of the trade by the time I woke up. That never happens to me.
Yeah. It's usually the opposite. When you
Well,
wake up.
no, well, yeah. I mean, sometimes I'll get limited into a trade. Like let's say I put in an order here, I get limited into the trade. I wake up and I'm like underwater a little bit, and I'm like, oh,
Yeah.
I got to work my way out of it. Sometimes, I'll get into a trade and I'll get stopped out. Sometimes I'll get into a trade and then I'm profitable, and then I've got to work. But like never do I get into a trade
Completed.
and then I put in a limit that's usually so far away that I'm like, that's not going to get hit. Yeah, so I woke up with a really nice gain this morning, and that never happens. Like I said, it happens when I have a gain, but to have one locked in already, I was like, wow. I had to rub my eyes a few times overnight, thinking, holy cow, I can't believe that happened. And no, I didn't tell anybody in the chat room I did that, because I do those things usually before I go to bed, because I'll look at the charts and it's like, I'm tired, and I'll go, okay, if it really gets down here, I'm going to buy it, type of thing. I'll just put in a stop here. And I don't put in huge positions usually, unless I'm adding to something, to a position that I'm already in. It's usually fairly small, but the dollar Mexican peso, to get that type of volatility is not uncommon, and especially based off what happened the last couple of days. And taking big positions, I didn't even need to, and still did pretty well. So I was pretty stoked about that when I got up this morning. Like I said, that never happens. All right, so what I'm going to do is I'm going to go through the charts now. As we had we talked about, or Dale's talked about here, the Trader Summit actually starts shortly. We start how many hours from now, Steve? 4 hours from now?
3 hours and 45 minutes.
3 hours.
There's
Oh
a
yeah,
That's accurate. Well done.
yeah, about 4 hours from now. So we're gonna kick it off with you, Dale, and then you and me, and we're gonna I'm gonna talk. I'm gonna do a little bit of analysis and talk about the event, but make sure you guys are there, at noon, and then I'm gonna roll into an interview with Daniel DiMartino Booth. So then we're gonna be doing some, she's basically like a Fed insider. So I'm going to throw some good questions about the Fed and her experiences and how she feels about where we're at. And I think that's going to be, when I say where we're at, with the Fed at 0, and almost as far as the eye can see. I mean, if you look at let me pull it up here. You look at US and what the market is expecting, and where we're expecting rates to be from now until 2022. We're expecting rates at basically 0 forever, as far as I can see. So how does she feel working at the Fed, knowing how the Fed operates? How does she feel that, how does she feel about where we're going as an economy? What does that say to us as, people in the US economy? And this is not just us, I'm talking the world. And I'm going to ask her actually about, interest rates in other countries and how she thinks it's going to shake out around the globe as well. So anyway, it's going to be, it should be a very, very insightful interview today with Danielle, and I've got a lot of questions ready for her. And actually, I have a couple questions from our community at large in the Forex analytics chat room. So anyway, you guys don't miss it, and make sure you do register. Steve did expand the seating for us because we got too many registrants, so we had to expand the seating to make sure that you guys could listen in live.
Steve is so sore running around putting those folding chairs up.
I
He
know,
spent all
I
night
know.
doing it.
Well, fortunately, Dale, you get to clean up, so that's good news is you get to stack them all when we're done. So make sure you check it out, guys. Don't miss out. And let's get into the charts. Let's get into all the charts here. Okay, let's start with the euro. So the euro, I'm a little irritated once again with the euro dollar. I actually had an order to sell euro at one. And by the way, I was short yesterday a little bit, and made some money on the short side on this bounce. I had an order to sell at 116.95 overnight, and we only got to 85, of course, so it missed my order. But here we are at trend lows. And I just have to say this, while we're below 117, you should not be bullish. Okay. That was a bearish breakdown point. So next stop is 116. Now we are at support here, 116.30. Okay, so just keep that in mind. But next support will be 116 below that.
Be back in a minute, Blake.
Oh yeah, sure thing, Dale. That's going to be your 50% retracement, right? It's right there. It's little congestion zone, right? So yeah, I mean, 116 will be the next logical spot. Just keep in mind that relative strength is nearing oversold. So realistic expectation for us to get there. The cable. Now, the cable was weaker this morning. It bounced. There are a lot of Brexit comments that are happening. Amanda in our chat room, thank God she's around, because she not only is she's not only just a great trader in our chat room, but she really stays up on the Brexit news, and she keeps everybody informed about what's going on here. Sorry, guys. It's Friday, and I'm tired. I'm going to try not to yawn during the interview. I still need another 3 more cups of coffee. But what we are doing is we're sitting here over the 200-day moving average. And what I would be thinking right now is if we breach these lows, which comes in at 126.75. I know we wrote this down yesterday, but we break this, and then that should start a new leg lower, in my opinion. We do have a bear flag pattern. So it seems like an eventuality to me that we're going to break down. But again, this has more to do with the Brexit headlines than anything. 128 should offer resistance today. I think those numbers are the same from yesterday too. We are bearish. Okay, and I'm going to tell you guys, we have to stay bearish while we're below the 130 level. While we're below here, there's absolutely zero reason to be bullish, because this is below this trend line. We've already shown rejection. We can get bounces here, but to be like outright bullish, like I'm going to go long cable because I think it's going to 140, can't do it while it's below 130. Just can't do it. We came out of an ascending wedge. We have a double top developing, broke this trend line, and now we're just sitting on the 200-day. And with the euro looking like we're going to trade down to 115, in the next couple of weeks, I can't rightfully be long or bullish the cable. That doesn't mean it can't bounce, because obviously it's news driven right now. It's not, it's not technical. Aussie's technical, and Aussie broke the channel, and we are testing 70.30, which is obviously a big breakout point from 2019. But I'm just going to write this down. I have to think that there are a lot of frickin' stops. I said frickin', just so you know. there are a lot of stops. There are a lot of fudging stops below 70. And heaven forbid we break through 70 because there will be hell to pay. I got asked yesterday by Jason, one of our Forex Analytics clients. He asked me yesterday on the daily roundup, which is, for Forex Analytics subscribers. He's like, the Aussie, don't you feel like it should, at least, pull back 50%, based on everything, this, that, and the other thing. And I'm like, I'm actually quite bullish the Aussie. I want to, tell you guys that I think that this sell-off and reversal, this V reversal that we got here is very bullish. I'm not bullish right at this moment, but overall, I'm pretty bullish. I'm actually looking for a place to buy the Aussie dollar. Where I'd like to be long the Aussie is on the 38% retracement that's near the 200-day moving average. It's down here at 68. That's where I'd like to be long the Aussie. Can we trade down to the 50% retracement? I think it would be a gift if we got down there. If we got down to 67 cents. But generally speaking, I'm really actually looking to be long Aussies down here. I actually think that the dynamic of what we're seeing in currencies is going to change in the coming year ahead. I actually think that the way the dollar is going to be trading, I think the dollar is going to be not used so much as a risk on, risk off type of trade. I think the dollar is actually going to be out of favor for a lot of different reasons, which I'm not going to go into right now because, I'm going to save time for Steve and Stelios and everybody else. But anyway, overall, I think the Aussie is bearish right now, though. I think we could very easily trade down to the 200-day moving average, maybe the 38% retracement. So anyway, let's watch it. While we're below 71 cents, there's absolutely no reason to be on the long side. Okay, I'm gonna finish up here. Hey, Stelios, Steve, do we have any data coming out today?
We have durable goods, yes.
We have durable goods. Okay, I looked yesterday and I'm like, man, there is something that's happening. Kiwi, 66 cents. Remember, we got a double top. It plays all the way to 64 cents. So selling rallies to 66 cents makes sense. If you look, let me just, Forex Analytics subscribers, end of day analysis yesterday. Expect rallies to find resistance at the 66 cent level overnight and support is at the 65 cent level. Double top is still in play, targeting 64 cent level. Big time rejection overnight at the underside of the trend line and the 66 cent level. As we noted, rallies would fail at 66 cents. Highs were 65 and 92. I mean, that was a gimme up here. That's a gimme. All right.
I ask for gimmies when I'm 10 feet away.
You know what? This one got within 2 feet of you. So gimme.
You know what I'm talking about. You
Oh.
can make me putt this from 10.
Yeah.
Just give it to.
Yeah. Oh,
all right.
Believe me, I'm a golfer, and we don't get we don't unless you're
no gimmies.
Unless you're two inches from the cup, there ain't no gimmies.
We used to play beer golf, so
I'm working my way down here. Dollar Canadian, I think we're developing a triangle, but obviously my focus is on this one as I'm long. But we have the inverted head and shoulder pattern, the dip to 133.30. Just that was just this is we've had the zone drawn here for how long, guys? I mean,
weeks.
Yeah, the blue lines. I mean, we knew it was resistance on the way up. You can see blah, 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 blah. We broke out, support on the way down. You know what? Big. So 133.30 is big support. And why do we reject 134? It's the 24% retracement. So we just get a little overshoots here and there. I mean, we went to one, I should write 34.20 because we went to 18 yesterday, but still, you guys know why it's there. It's the 24% retracement, longer term, right? On a weekly basis, It's the 24% retracement. That's it. All right. Dollar max. So supports at 22. Oh, durable goods. Dang it. Hold on. Coming.
You have 40 seconds.
40 seconds. Thank you. 40 seconds. Let's get this is, if you, Forex Analytics, you can open your data flash. Let me put that right. Hold on. Let me grab Bloomberg just so you guys can see Bloomberg. You guys see how fast there's data flash. Here's Bloomberg. Okay, you'll see the data right here. Shoot. No. Watch these two columns. Watch these two columns. Oop. Wow. We missed. Look at Bloomberg. Just showing. I mean, literally. You know how much Bloomberg costs every month, guys?
$2,500.
$2,500 to $3,200, depending on what you guys have for.
To simplify it, a lot less than a Forex Analytics subscription.
Yeah. I mean, that's crazy. That's crazy because I rely on Bloomberg for news. Now, obviously I get some headlines and stuff like that, but I mean, for economic data, if you're out there trying to, I just got the other piece of durable goods, by the way. If you're trying to, trade off of this, I mean, all right. And that's, even if you have the $19 a month, which I don't recommend, but but even if you have the light version for $19 a month, you still get data flash. I mean, come on. But this is the offer you guys should be taking advantage of because we don't put it up often. So make sure you check it out. Okay, sorry. Back to analysis. Swissy, by the way, Citi just added to their long Swissy exposure today, which I find a little crazy because this is the underside of this trend line. And I am a little worried if we get some risk off, the Swiss could strengthen. So you guys know I feel that way. But I think resistance today is going to be at 93 cents. Support is back at 92. What was that? 92.40. I'll be done here in just a second, guys. I don't want to turn it bullish yet. I just don't. Dollar yen, same as yesterday. Resistance now is at 105.80. That's the 618. Still range. Support 105.10.
You put 108.50.
Oh, shoot. Thank you.
It's all right.
Dyslexia setting in.
Hey, Blake, I have just a quick question.
Huh?
Could we have a bear market in the dollar and have a long-lasting uptrend in U.S. dollar yen? Have you seen that before? Like, say this rally in the dollar ends at 95 to 97 and heads down. Could the yen still, U.S. dollar yen still be, enter?
Absolutely.
Okay.
That would just, all that would be happening right here would be like Aussie yen going to 100.
Okay.
Right.
Okay.
Stuff like that. Euro yen going back.
And that would most likely happen during like a risk on period where.
Yeah, exactly.
Right. Okay.
It could very easily happen right after the election.
Weak dollar and weak yen.
Yeah, we could see
Okay.
Trump wins, and we could see a big risk on rally. I mean, that's entirely possible. So
thank you.
Yep. Good question though. Dollar index.
I'm still learning, guys.
He does this, guys, for you. He knows all this. Just he likes to play around.
No, really, I didn't know that.
Okay. Dollar dollar index, big 127% extension. You guys know this already. Previous support, March, this is pre-COVID lows. Okay, we're hitting it. Obviously, this is why everybody shorted the dollar index yesterday. If you saw my tweet this morning, and I said a lot of people shorted the dollar yesterday because we're all looking at the same stuff. I mean, everybody shorted it at 94.60, and they thought they were golden until this morning. They got they're back. It's back up in their face, and like, oh crap, what am I going to do with that? It's exactly how you should be feeling right now. 94.65 is the 127% extension. That's probably pretty good resistance. And look, I'm bullish. While we're above right now, while we're above 93.40, but I'm going to write down support today at being 94. But while we're above that, I don't think there's any reason to be bearish. I think the dollar index has a nice base, and I think we're going to be trading back up towards 95.50 to 96 before it's all said and done. US dollar, Norwegian krona. If you are a Forex Analytics subscriber, you got this. Okay, that was an hour ago. Right here. And it's been pulling back because we hit new highs, and relative strength was not only overbought, but divergent. So do I think US dollar, Norwegian krona is still bullish? Yes, I do. Do I think it's going to be in a consolidation? Yep. So support now is at 947, resistance at 961. Wait, oh, already 22. I think I was already doing this for you guys. 22. I was doing it, and then Dale asked a question. So, which is fine. I just, that's why I was like, hey, didn't I already do that? So resistance is going to be, I mean, I would just write down probably today's highs. 618 comes in at 2241. So I'm going to write down 2242 as being resistant. I think we're going to consolidate. If you're dealing with the dollar, I don't think we're going to see any type of runaway dollar moves today. Unless equities absolutely implode. I just don't think that's going to happen. I think what we're going to be doing, if you look at whether it's the dollar MEX or the dollar Canadian, dollar Canadian may do this over the course of the next couple days. We may wedge like that. I actually think we're more in a triangle for now. Something that looks like this. Dollar Mexican peso, probably going to be very similar. We're probably going to do something like, something like that as we consolidate gains and get ready for the next leg higher. That's what I think is happening. So don't get too, carried away with chasing things around today, which you should never do anyway. Gold and S&P, right? Okay, let's start with S&P. So 127% extension. You imagine if we hit new lows in the S&P, new lows, relative strength is going to be all sorts of divergence. So I think support at 3,200 should probably hold today. Resistance is, and you move to 3,300 now. That's previous support here. I know we surpassed it, but I still think we're making lower highs. So 3,300 should offer really good resistance today. And 3,200 is support. And yeah, we are bearish while we're below 3320. I think we have to remain bearish. Gold, as I mentioned in the daily roundup yesterday, I was talking crap about Stelios, and he didn't even know it. during
Thanks,
the daily
man.
roundup.
Love you.
Hey,
Love you too.
you know what? You don't listen, you miss out. You don't listen to the members, daily roundup webinar, you're gonna get beat up, and there's nothing you can do about it because you're not there. Because I'll just talk crap behind your back the whole time. I'm just kidding. You know what
Fair.
I told? No, but what I told everybody yesterday, I said Stelios is, he's probably one of the better silver analysts I've ever seen. And I'm like, he doesn't day trade silver, but he strategically buys silver in places, and he's acquiring a position. I said he got the best price you could possibly get yesterday at 2170 something. I remember when you got in the chat room, you're like, I got limited in right here. It was like below
It
20.
was 85. It wasn't the low.
Okay, I
85.
knew it was down there.
Clean
And I
it up.
told everybody, I'm like, look, this may not be the low of silver right now, but when you have people like Stelios that are strategically placing themselves in silver longs, I know if I had to imagine what silver is going to do in the next, several weeks, it'll probably be something like this. If I had to just guess,
Yep.
They'll be
I know.
smiling.
I'm usually early. You know that.
Yeah, I know. Your wife said 2 minutes early. Joking. But but when you're establishing a position and you're looking to put in a foothold in a longer term position, you got to think about people like Stelios, who's very talented at doing that.
Yeah, out at 27, back in at 22, not bad.
Yeah. I mean, long term, and he'd been buying down in the teens, years ago. So, frankly, I believe silver is one of those things that I want to be long as we approach 20. So, and yes, I'm still in all my physical. I'm talking from a trade perspective, but gold's trading a little heavy, guys, and I think gold could see the 618 retracement here at 18.25. Notice how we keep probing these August lows. So
notice how Goldman got killed, FX trader, when we were bearish, and don't fade Goldman. Don't fade them. Well, Blake, please let me know what they're doing in the precious metal arena from now on.
I'm the one that told you. I'm like, they're long gold. They're long gold at 1930, and their stops at 1905. And I said their stops are going to get hit.
Yeah.
So they did.
Goldman. There goes Goldman.
18.25 is going to be next big support. Okay, and I think we're bearish gold while we're below 1920, which was the previous all-time highs. Okay, whoops, sorry guys, hang on. Okay, I'm done. It's finished, guys. I'm going to pass it over to you. So everybody, please make sure you get registered for the Trader Summit. Make sure you're there, and be there when we kick it off. I don't want to be there by myself, just me and Dale. I'll make sure there's some people there, right, Dale?
Yeah, and don't forget the promo, the discount on the memberships. We're running out of time on that.
Yeah.
Forex Analytics.
Getting
Very good.
myself
Okay, I'm
ready.
going to pass it over to you guys. I'm going to go take a shower and do all that fun stuff. So you guys, thank you so much for listening in. Happy Friday, and thank you guys for all your support. We'll see you guys in a few hours.
Thank you, Blake.
Okay,
Thank you, Blake. Hey, nice background, Steve. I like it. Nice shirt, t-shirt. Sorry. Very nice.
Very nice.
Getting myself ready.
Nice shirt. Shame about the face, but yeah, it's
Indeed.
good.
Indeed.
Well, you have a great face for radio, Steve.
There you go. Exactly.
Nice shirt. All right, I'll talk to you guys later.
Thank you, Blake.
Bye-bye, mate.
I don't know. I think Steve would look good on Al Jazeera TV.
Something tells me this will very, very fast get politically incorrect.
Okay, so let's move
So
on.
I'm not going to try to expand on that.
So moving on, we're getting closer and closer to the US elections. I still think this is the main event going into the year end. there seems to be rumors or people talking about a new stimulus bill that's going to be drafted by the Democrats, which is going to be just over 2 trillion. So that's less than expected, or less than what was passed in May. But then they still have to pass it through Senate, and I don't think the Republicans are going to be on board with that. But obviously, you never know. So there remains uncertainty about the bill and about funding and about everything.
I think politically, Stelio, it's a win-win situation for the Democrats. Because the Republicans started by proposing 1 trillion for the second package. The Democrats said, no chance, we're not voting for that, we want 3 trillion. And now they're proposing, Republicans went up to, what was it, 1.5 trillion. And now Democrats are at, I think, 2.4 trillion.
Yeah, 2.4.
So the whole point here is the following. If they don't agree on it, the Democrats are probably going to be like, okay, we wanted to give more to the people, but these bad people didn't want to vote for it. They vote for 2.4 trillion. Democrats are going to be, they wanted to give you 1, but we made them actually, take that 2.4 times higher. Now, there is no way you can win this kind of argument once you go in a bargaining game. So it's 2 options. One, you say that money is not falling from the trees, so that's not an option. Option number 2, you go along with whatever number, because once you say yes as a concept, then you just look like a cheap, like stingy once you start cutting off, especially ahead of elections.
Yep, that's true. But like we've said before, ahead of elections, you're going to see a lot of things being said and promised and toing and froing, and it's just to be expected. But the main thing is that we had the first bill which helped people. Now, if it stops, then there's going to be trouble. So let's see what they agree on to keep things going, because the economy itself, especially with cases rising again, the economy itself just can't. I don't think it can pull itself out of this hole at the moment. But
I'd love to see the market rally into this rescue package and fade it then. So, maybe that's what's going to happen, that the market 3,200 holds for a while and we get a lift until they pass the package, and that may be the fade. So just a thought I have.
Yep. And to answer our friend's question, it's supposed to be voted on next week. So,
okay.
But it's not firm from what I know, but it's supposed to be next week. So in other news, economic data, very little. Really, the main thing remains equities, risk assets. Which way are they going to go? We're seeing at the start of a small correction lower. I've always said I don't think we're going to see something in between. We either see a proper correction, S&P to 2,700, or we just stall somewhere near here and just fly. So I personally think we're going, we're going lower, but obviously it remains to be seen. We talked about metals before. As Blake said, I'm starting to accumulate. And again, I don't recommend people follow me or do what I'm doing, because I have I do this unleveraged and I have no stops, because I'm very, very convinced about this trade.
Stelio,
yeah.
Have you seen natural gas?
No, I haven't.
Oh my goodness!
And what it's done during the past 3 days?
Why is that? Is this technical, or is it something behind it?
Definitely, they first destroyed, technically speaking, anybody that attempted to be long.
Wow.
At a retest of 205, but just look at this. The reason I'm showing this while we were talking about silver is because, in all honesty, I think there is a very good chance that silver is going to find a low, perhaps in a similar type of fashion.
Yeah.
And a lot of people that will be looking to buy it will not get an opportunity to do so.
Yeah, I personally think that I think you're right. I just don't know how much lower we're going to get. We might get lower because I think a dollar spike
21.
is coming. And yeah, 21, maybe even somewhere, even closer to 19, we could easily. I think if we see a dollar
That's going
spike,
to be a dream come true.
I know, but you know how markets work. We've seen it so many times. If we see a dollar spike because of stocks selling off or anything, then metals are going to go lower. End of story. How much lower, I don't know, but I think they're going to get taken with everything else. And then logic will come back, and I think it's going to get scooped up by everybody. But I think we might get lower. I actually think 17, 15 gold is doable. I really do. I know it sounded extreme when I was saying it at all-time highs, but I think it's doable.
GDX back to 32 would be a dream scenario as well,
Yes,
if you ask
yes,
me.
Yes. Forex Gal, you'll see my face on Trader Summit. I'm not wearing my Trader Summit shirt now, so I can't actually show it. Yeah, so other than that, really it's a wait and see scenario now. We're getting more and more COVID cases. What was it? France, I think, had a record daily number. One of the big European countries. I think it was France, but anyway.
France, it's I think 16,000,
yes,
90
yes.
something. Yeah.
Yeah. So you're seeing Europe having a proper second wave. Interestingly, Italy is not faring badly. They
Of course.
were probably the worst off in the first wave, but now
of course, now they they have big part of the population having herd immunity. I mean, herd immunity have started development because, especially in the north, part of the population, big part of the population has already gone through it.
That's true. So cases are going up, and I've said this so many times. I really wish this thing would go away easily and quickly, but it doesn't seem like it is. So being long risk, I think, has many dangers here. Even though we've had a little correction now, I think we're going lower. And call me crazy, but that's what I think.
You're crazy.
So I'm crazy. Yeah. That's it. So we'll wait and see what happens. And I hope to see everybody on the summit this weekend, or starting today. Actually.
If for some reason, which I wouldn't understand what that reason could be, you haven't registered yet, we are like 3 hours away. So there it is. Here's your chance to register, to enjoy some of the best interviews and presentations you can see. And needless to say, the highlight is tomorrow's debate panel between Peter Schiff, Pompliano, Mark Yusko, Mark Dow,
yeah.
and Daniel Lacaille. Yeah. Yes.
Yeah. Perfect. Okay, Steve, thank you.
Thank you, Stel. Okay, so let's really fast go over a few things. Dale, do we have an interview today?
Yes, Jason Sen is supposed to be with us. I don't see him yet.
How much has he sinned?
Sen.
Okay. Okay, I'm going to start.
I will tell you, my camera's not working. I thought I tried it. We'll have to get together after this. Oh, dear. And Jesus. Anyway.
So, first of all, DXY, I'm very interested to see what's going to happen from 95, why 95, previous support resistance area. And, I'm also monitoring this broken trend line support, which might act again as resistance. And I'm saying this because, dollar is obviously, super critical for what the markets are doing. Now, having said that, and I know that Blake has covered, mostly what has to do with FX. So far, what I'm seeing here in the metals is probably a consolidation. Yes, silver posted a very nice hammer yesterday, but I do think there is a nice possibility to see another low before higher. So ideally, that's what I'm looking for, another low. There you go, Dale.
All right, buddy.
So ideally, I'm looking for one more push lower before we see a recovery. That would most probably imply one more leg lower for stocks. As I've said, the next downside support area for the S&P is the 61.8% fib at 31.85. Now, as I already shown, one of the most impressive moves has been in the natural gas, which literally exploded higher within less than 3 days. Within 2.5 days, we've seen natural gas reclaim all this move lower and actually push to new highs. My next upside target, which was at 2.9. Needless to say, of course, I didn't manage to rebuy it because it never pulled back. Once we saw that day, if you remember, I said that I'm willing to rebuy it for another run higher if it backtests 205. Yep, that never happened. But it's okay. I mean,
That's
that was
why
my
they
trading.
call it the Widowmaker, this natural gas.
Yeah, that was my trading plan. Previous time I
Yeah.
followed my trading plan, I made 20%. This
Yeah.
time I wanted to follow my trading plan, that yielded me nothing. But you know something? I'm okay with that.
That's trading.
Yeah, that's trading. I'm okay with that.
And you followed your plan.
Yeah, exactly. The previous time it worked, this time it didn't work, but I didn't lose something. I just didn't manage to enter the position I wanted. It's okay. I mean, things like that happen.
Right.
So, oppositely from what we're seeing with natural gas and the general volatility we've seen in stocks and FX, crude oil seems more or less unfazed. I would still favor one more leg to the downside. Ideally, I would want to see one more leg to the downside. But so far, I'm kind of perplexed with its inability to, in essence, correlate with more or less anything. But it is what it is. I'm more than happy to buy it, but not at current levels. So, if it wants to pull a natural gas and explode higher, and me having no position, I'm going to live with that because, according to what I have in mind, that's not a good price for me to buy it, and it is what it is. Now, copper. I had mentioned that a few days ago. It's worth mentioning here that copper has finally broken through this ascending channel. I consider this quite important. We're now holding this horizontal support resistance area just below $3. I think it's a dangerous proposition to try to be long copper here. I think it's a good chance that we're seeing the beginning of some type of a recovery, of a correction from this massive recovery higher. So, I just wanted to follow through with that because we did have a technical development in regards to that. What else did I have in mind to talk about before we get your interview? Yeah, just a follow up in some of the yen pairs. If you remember, when we had Greg on, I had talked about monitoring Aussie yen, which is now breaking below this channel. We had talked about Kiwi yen, which is more or less struggling to hold the support area. Bottom line, I think Aussie yen and Kiwi yen, both of them, seem very, very close to a potential breakdown. So you want to buy them, you buy them here. The risk reward is quite nice. But if they do break lower from where we are, I wouldn't be long in any way, shape, or form. So you should be very, very careful in being long if we break through that. Now, going to the USD yen is at an area that it could reverse lower once again. And probably that would be the catalyst to see these two break down. And now I'm not going to cover Aussie and Kiwi against the dollar because I know that Blake has already done so. So no real reason to go over it again. We have very limited time. Dale, any more questions that I've missed and Blake hasn't covered? There is a question about the DAX. I can actually cover that. The DAX has broken through this ascending wedge. That's quite an interesting technical development. We actually, 2 days after breaking through it, we had a positive day up to a point where we back tested this and we got rejected. So DAX seems to be breaking down.
Eurosec.
Eurosec, yes. Actually, we can cover some of the euro pairs outside of the euro USD and the euro yen. So here is euro NOK. Big breakout here, right? Very nice technical development. I was expecting either a breakdown or a move higher, but in any case, usually after getting volatility contracting in this type of formation like a triangle, you usually expect once you break out to see nice continuation, which happened in this case. And Eurosec, you'll notice that it's not much different. I haven't had a look at it for quite some time, as you see. But, you know, we had this breakdown after this false move higher. And now, you know, Eurosec has more or less gone vertical. Now, where would we be looking for resistance? I think to begin with, we need to fib this. Okay, 38.2 seems to have done the work so far. In any case, just to be clear here, I would be expecting a continuation lower eventually. Now, 1058 support, next upside area, I would have to say at around 1085. But if you want my opinion about what I would be doing with Eurosec, you know, right here, right now, the answer is nothing. If you don't have a position at the moment, I don't really see any trade that, you know, provides a risk reward you should go after. As simple as that. And, you know, that's not necessarily a bad thing. By the way, one more thing I wanted to mention before, because Blake talked about the USD Swiss, you know, important to know what the USD Swiss is going to be doing is, you know, having an opinion about Euro USD and having an opinion about Euro Swiss. So Euro Swiss seems to have spent quite some time trapped in this rectangle. I mean, we do know that the S&B is manipulating this specific currency rate. I mean, they openly admitted, so it's not any type of speculation or conspiracy theory. I mean, they openly say that they do so. So, you know, who knows how long this little band they've created now will last. So, you know, as long as bottom line, as long as Euro Swiss is trapped in this tight range, I wouldn't be expecting USD Swiss to do anything else than the exact inverse of Euro USD, of what Euro USD is doing. Okay, is your guest here, Dale?
Jason, are you here in the room under a different name?
There's a question which is an interesting one. What's happening with USD TRY? You know,
Yeah.
I'm going to tell you what I've said literally 100 times in the past. The Turkish lira is doomed any way you look at it. As long as Erdogan is the one that wants to be in charge of monetary and fiscal policy, and he's pursuing the policies he's pursuing, it's not by accident. Probably this is one of the most prolonged trends in FX at the moment. Just a reminder, in 2008, the Turkish lira was almost, one Turkish lira was almost worth $1. Okay. And we're currently above 7.5. And there is absolutely no reason why you should expect, even though they did hike a little bit, and even though we do know that they're intervening in the market, we know that they've spent a huge part of their currency reserves, and you know that is also a warning signal, because they've already unsuccessfully spent a lot of their reserves to support the Turkish lira. And as you see, the result has been, you know, let me say, unimpressive. Yeah, probably the Turkish lira would be even weaker if they hadn't done so, but they would have a lot more reserves. The problem is that Erdogan doesn't want to admit that unless he faces the real economic problems and he normalizes monetary policy to match the financial conditions and the economic conditions in Turkey, there's going to be no respite to this sell-off of the Turkish lira. Okay, so you should be very careful in taking the other side of this market. I've had to give this warning multiple times in the past, and I'm pretty sure a lot of people didn't listen to it. Yeah, at some point there are going to be some, you know, short-lived rallies, and I do think that eventually Turkey has something going for it. It has very good demographics, actually one of the best demographic situations on the planet. So at some point, when government changes, and if it changes, you know, in a way that's going to make it better, I think the Turkish lira might be a very, very good long-term buying opportunity. But we're not there yet.
All right, Jason is here.
Okay, perfect. So enjoy the interview. And I hope to see you all in a little bit less than 3 hours on Trader Summit. Thank you, Dale.
Thank you, Steve. Okay, Jason, I'm getting you set up here. I'm going to ask you to unmute. How are you, Jason? Welcome.
I'm good, Dale. How are you? Can you hear me?
Yeah, I can. I see a little picture of you. Have you been in Zoom before, buddy?
I have indeed. Shall I
Okay. You could share your screen.
Oh, sorry.
That's
I don't
okay.
have-
It's a green box that share screen.
Oh,
You weren't planning to?
sorry. No, I haven't.
Do you have a
Okay.
screen that you want to show us while we're talking about your day trade methodology?
Right. Sorry. I thought we were just having a chat.
Okay, we could have a chat.
Okay. I didn't realize
It'd be better if we could see your setup, but
Yeah, I can do that, but it's going to take me a little while. Sorry, I wasn't prepared
All right.
for that. I thought we were just having a
okay.
chat.
All right, well then let's have a chat. Jason, you're a veteran, you've been around forever. Maybe not quite as long as me, because you look 20 years younger when you were showing your picture. So I'll share my screen while you're waiting. Why don't you tell us how you got involved in trading, how you got involved, and who were your influences in your career?
Well, I've been around for about 33 years. I started when I was 19 in London on the trading floors. So that was a good grounding. Actually, I started in 1987, and within a few months, I actually lost my job. So I thought that was the end of my career in financial markets, but I was lucky enough to be taken on by a market making company, and that turned out to be pretty good for me because I got into market making, whereas before I was working as a broker.
So you remember that day in October?
I do, yeah. I guess you were trading then too, were you, Dale?
Yeah. I went down. I had an office in, regular type office building where banks were downstairs. I went down to the bank to see if it was open. I went in there and I say, is everything okay? And they go, what are you talking about? So they didn't, I would, thought the world was coming to an end. Anyway,
Really?
what a great buying opportunity it turned out to. I mean, maybe it was kind of like the mold for every other panic we've had, although that was very short-lived. Kind of like what happened with COVID this spring. How did you handle that? I know you're a day trader, so the worst thing that could happen as for a day trader is that you're wrong during the day and you're out, and you take your losses and you start over. Could it be what turned you into a day trader was what could happen position trading, and you want to be able to sleep at night? What drove you to that, finding that fit your personality the best?
Actually, you're right. That's a really good question, and you hit the nail on the head because I was an options trader on the floor, and I was trading STIRS, short-term interest rate contracts. So you just always had a position across so many different strikes and so many different months.
Yeah.
So even when I was on holiday, I was never really on holiday. I was always in contact with the floor. You could never really have a flat position, and if then there was a move, suddenly all your gammas and your thetas
Can
all
ruin a
changed.
vacation, can't it?
Yeah, it did ruin a couple actually. Had a couple where I came back significantly poorer than I was when I left. So yeah, I guess after about 15 years of options trading, I thought, I guess I probably was burnt out really. And I thought I could trade futures because I was an options trader. I kind of thought, hey, trading futures can't be that difficult. There's one price. But it was a completely different skill set. And I actually was trading my own money and lost about 30 grand real quick. So probably was a little bit arrogant and then realized, wow, this is nothing like what I'm used to. So I had to really go back to the drawing board. I didn't actually want to go back to trading options. I probably was a little bit lazy. And so, yeah, that's actually how I got into technical analysis, because I realized whatever I knew about options trading wasn't really going to help me in trading futures or Forex or anything like that. So I started reading books about technical analysis. And yeah, that was probably about 20 years ago. I started to study it. About 15 years ago, it really became kind of what I do today now, providing technical analysis every morning.
Which books did you read? I'm getting a question from one of our viewers, or would you recommend?
That's a very good question. I can't really remember that far back. I do remember I had, I think it's called the Encyclopedia of Chart Patterns or something like that. So it's a big, thick hardback book with a black cover. And I basically trawled through that. It's a really good book because it gives you the probabilities of each pattern working out. And you know what? I think those probabilities are still relevant today. So I enjoyed that one. I tell you what I did get into a lot was trading psychology books, and I can't really remember off the top of my head, but I kind of realized that that is maybe more important than being a good technical analyst. You know, you can learn all the chart patterns and you can learn all the candle formations and the candle patterns and everything else, but putting into practice, you really, really have to have control of your mind and the discipline and the patience and everything that we traders know about. But I did struggle with it. You know, I still struggle. I still put positions on that are too big for my account because I see this pattern. I think this is really going to work. And I end up finding myself getting carried away with a position that's too big for my account. And of course, some trades do go wrong. And then when you do lose money and you've traded too big, it's such a kick in the painful part of your body because it's not just the loss that you've sustained. It's a knock-on effect. You know, then you don't have the confidence to put the next trade on, or you put the trade on too small. So, you know, it really is so important to maintain the discipline and just trade robot-like, you know, same size every trade. Don't get carried away. Don't get too confident. Yeah.
Yeah, I had that tendency too, where you're trying to hit a home run ball, trying to turn something small into something substantial, instead of being happy with 30% returns a year, 40% returns, you're trying to turn 10 into 50, and in a hurry, or 20 into 100. But one of the most difficult things for me still, Jason, is my entries are probably my strength. I have a hard time riding things to targets, of having the patience for the hold. And the only way I've been able to overcome that is by taking partials and then trailing my stop. And I actually at times have to walk away or manage a trade from a much longer time frame. How are you with that? Holding, everyone sets up their strategy before they enter a trade, why they're getting in, where they're wrong, and what they're looking for. If you're good at that, maybe you can mentor me and tell me how you stay till your targets. What's going
Well,
on in your head?
I mean, you really have just summed it up, and there's not a lot more I can add to that. What I found again really is down to trading size. So if I'm being a good boy and I'm risking only 1 or 2% on a trade, I'm not emotionally involved. Like you say, when you're doing the analysis, you're setting your targets, your head is clear, you're not emotionally involved in a trade, and so you're thinking to yourself, you're looking at this chart and you're saying, okay, the market can get to here. There's nothing really in the way of us reaching this target. The problem is when you've got a position on that is maybe bigger than it should be, you get all excited about the profit and you feel like, I've got to grab that profit. I've got to grab that profit.
Yeah. First daylight syndrome.
Yeah, exactly.
I have all kinds of names for this thing, where people are so used to getting stopped out that they have small profits, they take it, and you need the runner to make up for the mistakes. And I'm just wondering, how you handle it. I actually got a good tip from somebody that I'll share with you. When you're thinking about coming out of a trade, ask yourself if you would reverse here.
Yeah, I like that.
Okay. So, and if the answer is no, you leave things alone and you walk away, because, you're tempted to take it, but there's no reason for, to take the other side of the market. And you go, no, I'm long. I wouldn't short it here. So then you stay. So, that's my, I ask myself that now, would you reverse stale? And if the answer is no, then I stay. So
I like that.
I forgot who taught me that one, but
Yeah, I
It's a
like
good
that.
one.
The
Yeah.
other thing I try to do, and I advise people, my subscribers or whatever to do, is to scale out, because you satisfy that urge to take some profit if you at least sell 25% of your position, and then you think to yourself, okay, I've banked something, and I do think the market will keep going, but I just needed to put some money, take some money off the table, just so I'm, can relax a little bit. And that also then gives you options, because how often do you see the market go in the direction that you think it will, but then come back, retest the level where you just got in? So many
Right.
people move their stop up to the entry point. That doesn't work for me. Too many times I've got stopped out at my entry point, and I'm thinking, why am I getting out here? This is the whole. I wanted to get in at this level. This is a good support level. Why am I getting out again? So that doesn't work for me. Moving my trailing my stop straight to the
The
entry point.
BE. Yeah.
If it does for
Yeah.
some people, that's great. I'm not saying don't do it. I'm just saying for me, it doesn't work. It doesn't make any sense. I'd rather scale out of the position as it hits some targets, and then if it comes back to my entry point, I've actually then got some bullets to get back in again. So that kind of works
I
for me.
like that. You can recommit with profits rather than principal
Yeah.
if you still like it.
Yeah.
How about, Jason, instruments that I know you do a lot of FX. Any other instruments that you like to day trade? Stock indexes, you mess around with them?
Yeah, well, for my subscribers, I do 6 Forex pairs. I do oil, gold, Xerx, Eurostox, FTSE, and then I do S&P, Dow, and Nasdaq. So I do like to keep an eye on all of them. I don't trade the indices so much. Not really sure why. I used to love the S&P, but for some reason I've just become more FX focused. But every now and then I'll have a dabble in the indices. I find oil really difficult. For some reason, I just cannot trade oil. But I do like gold.
Okay. All right. So let me ask you this. Do you look for certain risk return on your trades before you take them in a day trading environment? Maybe you can't get the huge R to R's because you just have the average daily trading range if you capture the whole range. So how much are you shooting for in a daily range? Say, what's the ATR in euro right now? About 70 pips or so?
Yeah, I guess so. Yeah.
So
sounds about
what do
right.
you shoot for in that range on a day trade?
Well, I guess I am a day trader, but I will end up running positions overnight quite
Okay.
often. So I am a swing trader. I'm not really a scalper. Scalping to me is just too much like hard work. I think I'm just too old for it. I've just been doing it for too long. I don't really want to sit in front of a screen for 8-9 hours. I know a lot of people like that. They're entertained by it. In fact, met a guy last night who's a super wealthy guy, was head of FX at a bank. He does not need to work ever again. And he sits in front of a screen for 9 or 10 hours a day trading. And he has 6-figure P&L swings during the week. And
Wow.
I think it's amazing that he can do that. He's absolutely absorbed in the markets, but that doesn't work for me. For some reason, I just can't focus like that.
You like to smell the roses and enjoy
Yeah.
the
Maybe I'm
beautiful
just
country
lazy.
you live in, right?
Yeah, well, I certainly don't have that kind of money. So, but anyway,
How are you guys handling COVID over there in Thailand?
oh, I'm not in Thailand anymore. Funnily enough,
Oh, where are you?
I'm back in the UK at the moment.
Oh, okay. All right.
Yeah, but Thailand actually, I was there during the COVID thing. I've only just got to England. But Thailand
Okay.
actually pretty much unaffected. Life is very much back to normal there. The government really shut the place down very, very quickly. They reacted very, very quickly, and so. But the problem is they're not opening up now, so
Okay.
you can't
Yeah, I
really.
mean, you can't go there.
Can't really get
They're
in.
not
No.
accepting people, right?
Yeah, it's very difficult. Even if you're a resident, it's very difficult to actually get back in the country. So,
why the move from Nirvana back to the UK?
well, my kids want to go to school here, so I'm.
All right.
And because the issue is, if I put them in boarding school, I'll probably never see them at the moment. So for the time being, I'm going to be in the UK until we can travel more freely, I guess.
Yeah.
It's
Okay.
difficult for everyone. Where are you
Okay.
located, Dale? Are you in the UK?
San Diego.
San Diego. Okay. How are you getting on over there?
You know, I still kind of isolate. I don't go, you know, there's no karaoke anymore, and I just, you know, uh, have a very small universe of people that I see, and I'm not interested in taking risk with COVID.
Mm, you're too
So
right.
yeah.
Very sensible.
So anyway, the U.S. right now. Uh, Now that you're in the UK, I should probably just go take over your house in Thailand and watch what's going to happen in the US election on TV instead of being in the middle of this morass. But and when we get back to your trading style, favorite indicator or trigger for you for your
Um,
trades, or is it
okay.
just pattern recognition?
Yeah, I think it mostly is pattern recognition. My number one rule is trading the direction of the trend. So for me, in my time frame, I'll look at the daily 4 hour. That's the kind of trend that I'm looking to follow. I'll use the 1 hour time frame to kind of fine tune the entries and the exits and look for the minor levels. So more as targets, really. Actually, quite interesting. And I wish I had got my charts up for you now. But yesterday was a
Next
real
time.
100. Yeah, definitely. Yesterday for the markets that I trade was a real 100-day moving average day. It looked like a lot of the stock markets just bounced right off the 100-day moving average. Some of the dollar pairs did. So for me, I didn't have a look at the market until for an hour before I chat to you. But when I last looked, those levels were holding. And although I don't have a position right now, but I would definitely be looking to get a risk on position on today if we dip near yesterday's lows. It just looks like 100-day moving average in so many markets was the magic one yesterday.
What's your Twitter handle again, Jason? Day trade what?
Day trade signals.
Okay. I just want. There we go. Okay, so there's Jason, and there's his background, and I wanted to show your website.
Oh, thanks. That's daytradeideas.co.uk.
So reliable, 33 years. You're an old guy like me.
I'm an old man.
Reliable. Look at this. Maximize. 33 years. I love the number 3. All right, so this is how you reach Jason.
That's it. There or Twitter. I've just started a chat room, actually. I just started it last week. It's something I've been wanting to do for a long time. But when I was in Thailand, I was building villas and I just couldn't do that and then commit to, looking after people on a more full-time basis. So I'm excited that I got that going last week and we're off to a really good start, actually. So I'm really enjoying that.
Well, Jason, next time I want to see your charts and talk about how you do it because, after 33 years, you learn a few things, right? And
Sure, that
if you're
as well as
if you're
me,
not,
Dan.
you either get good or you're just a masochist. And that after three decades, what do you think?
No, I think maybe I'm a masochist. I'm not sure. And you're always welcome in Thailand. I've invited you there a couple of times before, haven't I?
I know. I would love to go. I would love to go.
One day.
You know what COVID taught me, and I would talk about it. That time is our most precious currency. Is not to put off things that you want to do, thinking that you're always going to have the opportunity to do it. Do it now.
So true.
So,
true.
what I've learned is, you want to travel, you want to move, don't talk about it, take the action.
Yeah.
So, great talking to a veteran like you, Jason. I want to also thank you for getting the word out about our Traders Summit that's going to begin in a few hours. And you would be a great guest for a future one. And really, it was nice talking to you. And hope to do it again. Let's get in touch and maybe set something up in December so we could talk in a little more detail with your charts and your methodology. How's that?
I'd love that. And yeah, the Trader Summit looks amazing. The people you've got on there, I'm really impressed with it. So good luck with that.
Yeah, thank you.
See how you all get on.
Yeah, I'm looking forward to listening and doing a little moderating and missing football this weekend.
Ah,
So,
there you go.
really great talking to you, my trading warrior brother. Thanks so much for coming on late notice, and everyone check Jason out if that's your style. The guy has seen everything. He's seen his mistakes, probably hundreds of traders' mistakes. So let Jason help you not make them. And have a great weekend, buddy.
Thanks so much, Dale. Always good to talk to you. Appreciate it. All the best.
Okay, thank you, Jason. Jason Sen at Day Trade Ideas on Twitter. And that's going to be a wrap, everyone. We'll see you at the summit. And bring a pad of paper and a pen and write down the important things. You know, sometimes just one idea can change your life. One good idea. And with that being said, we're going to wrap this episode of Face Up. Remember, don't just count your pips, count your blessings, and we'll see everyone in a few hours. You're very welcome. You're welcome, Alexandros, Monica, and thank you once again, Jason. Talk to you soon. Adios.